of Indiacharts is with us. Rohit, thanks for joining in. You've had an optimistic view on the market for several weeks and months now. And finally, that all-time high has happened on the Nifty as well. What's the setup looking like? And I think, I'm asking on behalf of a lot of people out there, I guess, who would be wondering, especially if they are in mid-caps and small caps, whether this is a good time to take some money off the table, or is this just the beginning of what could be a much longer run?
To put it in short, the good times are here to stay. And I think that's important. That's a very important message, given all the negativity, specifically that comes from outside of India, from global shores, that we keep hearing. But if we simply look at the setup of charts, the momentum that we have seen, and even what has happened today, it's not indicating any signs that, we are going to get a significant pullback in the short term. So I think people need to, think really long. And of course, trading and investment are two different things. Investors, I think, are going to continue to have a good run well into 2024. So I think the investment environment has clearly changed. There is no doubt about it. You just have to ride it out, as you were really asking earlier. And this is a time to sit tight, not one to keep getting in and getting out as far as investing is concerned. Trading, of course, requires you to go back and forth. But when it comes to, trading, one will have to keep in mind that, sometimes just like in the last week, we didn't really get a very steep correction. It looked like maybe this time it will happen. But the 20-day average at 18,700 has held for the third time now in the last 2 months. And so that becomes a pivot. And the new high that we've made today is also further confirming the idea that this is going to be an extended move driven by sector rotation. So therefore, what ends up happening in that scenario is that the lead simply keeps shifting from one place to the other. But overall, the index keeps stretching without getting a meaningful correction. Individual stocks do their corrections in between, but the rotation just keeps the index momentum going. And that can, sometimes be bothersome to people expecting a pullback. But it looks like you're not going to get a significant pullback anytime soon.
So no meaningful correction, but we could get down to levels of 18,700, right, Rohit?
We were there, so this is where we've bounced off that, and the 20-day average.
No, but what about below that? We're just about 200 points above that level. When you say not a meaningful correction,
I doubt it. You're going to go below that. That's what I'm trying to say.
Okay, so just about 200 points. So even now, this is a very attractive entry point. And the upside on the Nifty and the Nifty Bank?
So in the near term, the first level you're going to look at is, we draw a trend line of all the tops we've made from October 21 to December 22. And for the Nifty, that level is at around 19,040 to 19,060. So that's going to be the first hurdle that it's going to go to. But if you ask me, I think that hurdle will get broken. And the answer is, the reason for that is, you've already done that in the Nifty 500. So the broad market, which has been leading the way, is already broken past the equivalent levels. So even in Bank Nifty, the equivalent level is at around 45,500. Okay, and the 20-day average is around 43,900. So you have support at 43,900, and you're looking at testing 45,500. So the risk reward will appear extremely favorable from a trade perspective. But again, will you stop at 45,500? The Nifty 500 didn't do that. The Nifty Midcap 100 didn't do that. And so the expectation shifts towards, these indices also following up on the broad market and breaking past those levels. But we'll be watching what happens there, because they are important technical trend lines and, resistance levels. But that's I think, the setup. The setup is really for this momentum to extend some more.
Rohit, I just missed the Nifty target. Bank Nifty, you said the first next port of call is 45,500. What's the target for Nifty?
So it'll be above 1940. We'll look at around 19,200.
1940. Got that. Now let's talk about leadership. You're saying that this market will see lots of sector rotation in terms of leaders. Now in the first leg, as we begin this, the next up move, who will be holding the baton?
Yeah, so we're trying to figure that out, we have a new software called Strike, where we're actually able to automate something like the Dow theory, and I got actually 5 stops on the Dow theory scan. Now, before I mention stocks, I need to mention we are not investment advisors, so we essentially provide tools to help us, figure out where the action is, and then people need to do their work. So I'm just highlighting what we noticed is out of the 5 stocks that showed up on the scan yesterday, 3 of them were actually financials, and 2 of them were in the auto sector. So my sense is that's the initial leadership that we are really seeing. We saw stocks like ICICI Bank, for example, and IndusInd, and yesterday we saw Axis. So over the last 2 days, these 3 banks basically showed an early sign of trend change based on the classical Dow theory. And similarly, on the auto side, we've seen that happen in, say, M&M, Mahindra and Mahindra, and we've also seen that happen in Hero Moto. So that's sort of a signal that, you can get banking. And remember, so when we think of banking, now we look at Bank Nifty, what really happened here is that Bank Nifty topped out around 3 weeks ago, well ahead of the Nifty. And it's actually been consolidating and pulling back even when the Nifty was not doing so. So in that sense, Bank Nifty has already had its pullback, had its retracement, it's tested the 40-day average, and it's resumed its rally. So it's actually on a fresh course, on the way up. So that is why we are seeing this, strength in banking just come back, because it's done that pullback. Now in autos, it varies from stock to stock. Some of them are taking support on the 20-day average. Some of them are taking support on the 40-day average. So if you take like M&M, that's, taking off on the 20-day. If I take a Maruti, that's taking off on the 40-day. Earlier, you were mentioning Tata Motors, that also took off on the 20-day. So this is what is happening. Stocks are individually pulling back to different levels, and then they're taking off on that. And that's what we're actually witnessing individually. We may even see, so talking about a market leader, Reliance Industries, you're seeing it make more than a 1% move today. Over the last 7-8 days, it's actually been pulling back, and the pullback has gone to the 40-day moving average and, bounced off that. So once again, very, very similar, where, averages end up holding and then the trend appears to resume. So unless these levels break, we would tend to presume that, the upward trend picks up.
Okay, and the market's upward journey continues even as we speak. It's 18,936, a 120-point rally is at the moment, with the sensex higher by 380 points. Rohit, thank you very much for joining in. Need to